Now we've heard one story that a candle can tell. Let's talk about some different types of stories. A DOJI candle. A DOJI candle is a story of indecision. This is an example of when the market couldn't make up its mind on what direction it was going to go because the opening price and the closing price were very close together. There was not a large move up or down. However, the wick, the price action over the course of the hour, could be high up on the wick or low or down on the wick. But the candle opened and closed very close to the same price. This shows that even though people may have bought and sold creating the wicks, generally the market could not decide whether the price of Bitcoin should go up or if the price of Bitcoin should go down. A use case for this is if you had an indicator that was telling you that you might want to place a long trade, you can wait for what's called a confirmation signal, something to tell you, yep, you're right, it's probably going to go up. There's a second indicator that confirms it. If a DOJI candle printed at that time, it would be a clear indicator to wait and not place a trade. Because if the market is not making up its mind, neither should you. In that instance, a DOJI candle probably would have saved you money. The next story is a hammer. A story of, I'll take that action, okay? A hammer happens when the open and close price once again are fairly close to each other. However, there is a lot of activity on the low end, okay? If there is a long wick, what this means is that there was a lot of buy pressure. A lot of people were buying up Bitcoin during the hour. So if it closed at the same price as it opened, but a lot of people were buying, creating that low wick, it can be an indicator that people are going to continue to buy in the following candles. Okay? Because it's a story of I'll take that action, a use case might be something like this. If we were in a downtrend where the price has been moving down for a period of time, and then a hammer candle forms, this can be considered as a reversal signal, meaning that the trend may reverse next. Okay? So if a lot of people are buying all of a sudden, then that means that the price may shoot up afterwards. What this means is, if you know the stories and you can read the indicators, then you may be able to know when the price is going to go up before the price actually goes up. Wouldn't it be nice to know things like that? Next story is an inverted hammer. Same story reversed. This is a story of, anybody want this stuff? Like a yard sale. Get rid of it. This is when the closing price and the opening price were very close to each other, but there was a lot of sell pressure. There were a lot of people that were selling during this time. Same thing, another story, anybody want this stuff? If we were in an uptrend and then you saw an inverted hammer candle print, it would show, oh, people have been buying for a little while, but suddenly, boom, right there where the arrow is, people have started selling quickly. This can be an indicator, sorry about that, this can be an indicator that the price is going to start going down after this, because if people are selling now, maybe they're going to continue selling the next hour and the next hour and drive the price down. Wouldn't it be nice to know that the price was going to go down before it actually did? And I'll have you note, this graph right here is the same graph from 2 slides ago, it's just reversed. That's how simple it gets, okay? Next story is one of an engulfing candle. This is a story of all aboard, okay? An engulfing candle happens when a green candle prints next to a red candle, and if you were to drag that candle over to the left, it would engulf the previous candle. What this shows is that there is not a lot of indecision. Everyone kind of agreed during this hour that the price should be going up a lot, okay? When this happens, depending on where you are in the story, this can be a good indicator that the price will continue to go up because now there's a lot of buy activity. There's a lot of positive movement in the market, okay? All aboard. Trains leaving the station, depending on where you are in the story. So, a use case depending on the story might be, if we were in a downtrend and we're heading towards a key point of support, right? For anyone that doesn't know what support is, don't worry, that's in the course. Now, if you were heading for that point of support and you wanted to know if maybe the price was going to bounce off it, the moment you see a green engulfing candle, that can be a good indicator that yes, support is strong. Maybe that's when you want to place your long trade if that's the type of trader that you are and that's the type of story this is telling. Engulfing candle, bearish engulfing candle, same story reversed. A bearish engulfing candle happens when the red candle prints next to a green candle, and if you drag it to the left, it would completely engulf it. This is a story of what? Everybody off. Same story reversed. Everybody's been selling this out. There wasn't a lot of indecision. Everybody universally kind of agreed, I want to be selling right now. When that happens, a use case could be if you're going in an uptrend towards a point of resistance and you want to test that resistance, if you see that there is an engulfing candle, a bearish engulfing candle, it's a pretty good indicator that possibly the resistance is strong and we may be reversing and heading back to a downtrend. Okay? These stories equal emotion depending on how well you know the story. We're going to get into that in the next course. Click over to the next one and I'll explain how all of this matters to you.